You don't need 10 grand to trade futures. In fact, if I were starting today with under $1,000, I'd still trade futures. And I'd argue it's one of the best ways to actually learn how to trade properly. The problem is that most traders blow up the small accounts because they treat them like a lottery ticket, over leveraging, forcing trades, chasing unrealistic goals. So in this video, I'm going to show you exactly how to trade futures with less than $1,000 the realistic way. We'll talk about how to size your trades, how to use micros, how to manage risk, and even show what a realistic year of compounding looks like with ups, downs, and even some deposits here and there. Let's start with what most people get wrong. If you've ever had a small account, you know the emotional roller coaster. You make 30 bucks one day and you feel like a genius, and then you lose 70 the next day and you feel like you're never going to make it back. The reason most people fail isn't because they don't have enough money. It's because they treat small capital like big capital. They risk 10, 20%, sometimes 50% on a single trade, and then they act surprised when two losses just completely wipe them out. I mean, I've been there 100 times. I'm sure all of us have been there at least at some point in our careers. So here's the math that we all don't like to hear. If you lose 50% of your account today, you need a 100% return just to break even. That's not a trading problem, that's a risk management problem. So the goal isn't to avoid risk, it's to control it in a way that lets you stay in the game long enough to learn and then ultimately come out on top. Now here's the good news. Futures are actually one of the best markets for small accounts, if you use them right. Unlike stocks, there's no pattern day trade rule. You don't need 25K just to make a few trades a week. Now, that rule is subject to change as I'm filming the video, but even if it does, there is still downsides to trading stocks with smaller capital. You also get real leverage, not the dangerous kind of margin that most beginners are going to abuse, but the kind that lets you participate without overcommitting capital. And the secret weapon for the small accounts, micro futures. They're literally 1/10 the size of a standard futures contract. Same price movement, same market, just smaller risk. It's like trading the same S&P 500 chart everyone else is, but at a scale that doesn't nuke your account for being early by 2 ticks. Let's break this down with real numbers. Take MES. That's the Micro E-mini S&P 500 futures contract. Each tick is worth $1.25. So if price moves 10 ticks, that's $12.50. If it moves 40 ticks, that's $50. And each tick is equivalent to a 25-cent move in price. That's enough to feel the emotions of trading, to learn how markets move without losing hundreds of dollars in one shot. The same goes for MNQ, the micro NASDAQ, M2K, the micro Russell, and plenty of others out there. Each one may have slightly different volatility and slightly different pricing structures, but the same concept applies. Small position size, same opportunity to learn. Now in TradingView, you can actually use the bar replay feature to test this. Mark your entries, mark your stops, set your targets, and you'll instantly see how small fluctuations in risk make or break your consistency. When you understand how small wins add up, that's when trading starts to make sense. Okay, so here's an example on MES, the Micro E-mini S&P 500 futures. On the right-hand side, we can see the price scale, and in front of us right in the middle of the screen, we can see candlesticks, and we can look at this as an opportunity to practice our own trading using the bar replay feature on TradingView. So I'm gonna go down here to where it says replay trading, click on the trade button, and now it's gonna open up this trading widget right here. I can use the order panel here to buy or sell if I would like, and I can pick how many contracts, which in this case is set by units. One contract will go with an example for this video. So let's say that I wanted to buy one contract right now. I click on buy. Okay. From here, we now have one contract and we have a TP or SL. So I can drag this down to set my stop loss. Let's say that I want to set my stop loss to the low of the day. Like if we go below the low of the day, which was set by this candle right here, this wick, I want to get out. I think we're going to reverse. I see a big volume spike right here. I don't think we're going to go lower. Great. How far down is that? Well, if price is currently at $6,909.75 and we have the stop loss down here at $6,903.25, that's $6.50 of difference. That comes out to $32.50 in terms of a P&L swing that if we do push down, I will lose. So we can see that that's not a ton of money, and that's very, very solid and potentially safe for those small accounts around $1,000. Now let's say that I wanted to move my take profit up here to the high of of the day where we had that move right at the open. This would be a move all the way up to $6,927.50 on the MES contract, which would equate to $88.75. Now, the cool thing is if I hover over my stop loss or my take profit on TradingView, which makes this super, super nice. If I hover over this, it'll tell me take profit is 0.26% higher, equates to 71 ticks up in my direction indicated by the plus sign, and then it tells you the price. So 71 ticks equating to $88.75 because one tick is equal to $1.25. Then move to the downside right here, you get the exact same explanation, just for your stop loss. Now, if I was to click on confirm, those orders are now set. And if I was to play this out over time, we can now watch how the S&P would trade throughout the day and if our take profit or if our stop loss would hit next. It's a great way to simulate, to practice, to test without having to commit real capital. Boom, we got taken out, we got filled on the upside, and we made those $88 on that trade. Great. All right, let's build this out practically. Let's say you start with $1,000. Your goal is not to make $200 a day. Your goal is to learn how to risk properly and build the consistency. Here's what it actually looks like. If you start with one micro contract, you might risk around 30 to 50 bucks per trade. That's roughly 3 to 5% of your account. To many people, that's gonna sound like quite a bit, but I've got a trick up my sleeve to help make that a little bit easier on us. You're gonna keep your stop loss tight and your take profit roughly 1.5 to 2 times that risk. However, I say that now as a general guide. This is what I think is a good place to put yourself, but if you do that, you're probably going to have a win rate of less than 50%. That's okay. You can still be profitable. That's currently what I'm running with. I'm running with a 45 roughly percent win rate, but I make more money on my winning trades than I lose on my losers. If you happen to have a system that allows you to make more or to win more often, let's say 50, 60% of the time, understand that there's probably going to be a cost with your take profits on average. You're probably not going to be making 2 to 3x on your winners than your losers if your win rate is that high. It's a balance that you're going to have to find based off of how you trade, how your brain works, and ultimately your strategy. Now, we're going to look for a couple of clean setups a week. We're not trading 50 times per day. Maybe it's once per day. Maybe it's not even once per day. Maybe you come in with the intention to trade 1 time per day, but sometimes the setup just doesn't present and you just don't take the trade. At this stage, your number one goal is data collection, and that's where TradeZella comes in. It's the journaling software that I use personally to track every trade, all my setups, my emotions, my stats, everything. So when you're trading a small account, you need that feedback loop. You can't improve what you don't measure. I'll link up TradeZella below this video with a discount code. If you don't want to use that, that's fine. Use some sort of journaling software, track it in Excel. Make sure you have a way to track your trades every single time you close something out. After just a few weeks, you're going to start to see patterns, which setup's working best, what time of day you perform the best, the worst, whether you're cutting winners too early, and that is how you build your edge, even if you have a tiny account. Now let's run a realistic 1-year example. Assume you're not trying to double the account. Just grow it consistently while learning. Let's also assume you add $50 each month to your account. Something that most people can do. Starting with $1,000, here's a 12-month sample breakdown. Let's say that month 1 you make 4%. Then you add 50 bucks to your account every single month. So now your account's at 1,090 bucks. Month 2, you lose 3%, then you make 6, then you make 2, then you lose 1, then you make 5, then you make 3, then you lose 4, then you make 7, your biggest month yet. Then you make 3, you lose 2, and then you finish out December with a plus 6%, all while adding $50 per month each of those months. If you started January 1st, by the end of the year, you'd be sitting at $1,964.34. You nearly doubled your account. Do you know how many money managers would love to be able to double the amount of capital that they began the year with? The longer you stay in this game, the more you realize that while that number might not get flashy on social media, that number done consistently will be amazing for you and your growth over time. That is how real traders grow. If you zoom out, that's just over a 2% average monthly gain before deposits. And that's completely doable for someone who's patient and disciplined. And the thing is, if you can compound that way for 12 months, the process is now more valuable than the account size because you've learned how to manage risk, control your emotions, and survive the drawdowns that most people quit in. Everyone wants to make big money fast, but what actually separates consistent traders from everyone else is the survival. When you trade small, every mistake costs you a lesson, not your entire account. You get to test, adjust, and then actually learn without going broke in the process. You're not trying to turn $1,000 into $100,000 overnight. You're trying to become the kind of trader who could do that over the course of their career because your process is that tight. So if you're serious about trading futures with a small account, trade the micros, keep your risk consistent, and journal everything. And let the compounding, both in your balance and your skill, do all the heavy lifting. If this helped you guys out, drop a comment below with your current account size and your goal for next year. I'd love to see how many of you are starting small and doing it the smart way. And if you want me to break down how I'd scale this strategy up to $10,000 and beyond, let me know. We can make a video on that soon. Thanks so much, guys. See you in the next one. Peace.